Okay, class, in this lesson, you are going to learn to interpret and use the information on a pay stub, a W-2 form, and a 1099 form. So let's go ahead and get started. All right, so a lot of times, for those of you that have not worked and you work for the first time, you will see that what you end up getting paid is significantly, and I'll put that in quotes, significantly less than what your expected pay should have been. And the reason for the difference is because of taxes that you have to pay. And so employers, assuming that you work for a company or a business, employers are required to take out, and you're also required to pay certain taxes such as federal income tax, state income tax, in some cases city income tax if you work in a city. There's also Social Security tax, Medicare tax, disability insurance fees if you subscribe to disability, and there's also pension plan contributions such as 401k. If you put money towards that, you're going to get a deduction between your gross pay, which is what you thought you should have gotten, and the net pay, which is the actual dollar amount that you received. Okay, so medical bills also account for that difference. So dental and medical insurance fees as well. Okay, so and the reason the reason employers have these taken out from your paycheck each pay period is because it's significantly easier than paying a one lump sum for the entire year. And so they basically distribute the cost across all of your paychecks. Okay, now I use the word gross pay, and this is the amount that that you're actually paid based on your salary. So let's say that your salary is $36,000 a year, then each month you will be paid $3,000 in gross pay. That's the total pay. But after subtracting taxes and the items that I noted earlier, what's left is considered your net pay, or another term for that is take-home pay. Okay. Now, when you get a paycheck or a pay stub, you will also receive a summary of not just your wages, but also the amounts that are withheld, and they will be itemized. So you'll know exactly what's being taken out. Now, the amounts for tax withholdings, or the amount that you want or should have taken out for federal and state income tax, for example, is indicated based on what you submit on a Form W-4. This is a tax form which is titled Employees Withholding Allowance Certificate. Okay, we won't go through how to fill out these forms in this particular lesson, but you need to be aware that this form needs to be completed, and the idea or the goal of this form is to know pretty closely how much taxes you need to have taken out so that at the end of the year you don't have a huge tax liability or you don't owe a lot of taxes. Okay, and once you submit this form, the employer will withhold the taxes and send those amounts to the appropriate government or private agency. The employer, your business that you work for, or the company that you work for, will keep track of your withholding and deduction, and all of that data at the end of the year is reported on what's called a Form W-2, and this is called a wage and tax statement. And this has to be given to you by the end of January by law. Okay. Now, this information is used to compute federal, state, and local income taxes. And so when you file your income tax, you have to submit a copy of this W-2 that you receive in the mail. And your employer will also send a copy to the federal or state agencies. So one thing to also note is that not all income come from your job, okay? So wages, salaries, and tips. People also make money from interest on bank accounts. So if you put money in a savings account, for example, and earn interest, you can make money that way. You can also earn interest from stocks that you own. You can also earn money on royalties. So if you publish music or a book, you could earn royalties from that. So those are some of the examples of how other ways of making money. And when you make money that way, taxes are not taken out on your behalf. And so rather than getting a W-2 form from these sources of income, you are going to be sent what's called a Form 1099. And I'll show you an example of what that could potentially look like later on in this video. But just be aware that these amounts are reported to the government. And so when you get this form, you have to make sure to report this income as well. Okay, so let's take a look at example 1. Okay, so Joanne Toscano received this W-2 form from her employer. And the question is, how much did Joanne pay in federal, state, and local taxes during the year? Okay, so let's take a quick look at this W-2 form, okay? So what you will notice is that in your W-2 form, you have your social security number that would be somewhere up here, your employer's tax ID or identification number will be here, your employer's name and address. This is usually their headquarters if they have multiple locations, and then your information. This will be your name here and then your home address. Okay, and then all of these are a bunch of numbers here, and these will represent how much you made, how much was taken out, and things like that. So let's go ahead and answer the question, how much did Joanne pay in federal, state, and local taxes? All right, so federal taxes are reported in box 2 here, okay? So that's how much, this represents how much was paid or taken out of her paycheck to pay for federal income tax. Just remember, this is different than how much she actually owes, okay? And so if she took out the correct amount here, then her tax liability when she goes to file taxes hopefully will not be too far off. In some cases, some people will have too little taken out, and so at the end of the year, they owe a lot of money to the IRS. But then in other cases, some people will have more than enough taken out because they don't want to owe money, and as a result, they will end up getting a refund. Okay, so how much did she pay in these 3 different taxes? So we're going to look at box number 2, which is in the amount of $15,851. Okay, so this is box 2. And then we're also going to add her state income tax, which is box 17, and that's in the amount of $5,344.50. So she paid that much in state income tax, and we'll label this as box 17. And then the last item is box 19. She also paid a certain amount for her local income tax in the amount of $1,092. Okay, so we'll call this box 19. So when you add all of these numbers up, we will see that she paid a total of $22,277.50. Okay, now this as a percentage, this number as a percentage of her wages of $76,350 is most likely a little bit too high. And so she will likely get a refund in one of these categories, whether it's federal, state, or local taxes. Okay, so let's go ahead and move on to example 2. All right, in this example, Amy Springfield works for Pound Ridge Financial Planners. Okay, here we go, Pound Ridge Financial Planners. Her employer uses an electronic W-2 form as shown below. Okay. What accounts for the difference between her wages listed in box 1 right here and her Social Security and Medicare wages in boxes 3 and 5? Okay, so in the previous example, all these 3 numbers were exactly the same, and in this particular example, we're seeing a difference. And the question is, why is there a difference? Okay, so the box in the amount in box 12A right here, where you see a letter E and 12,200. This is the amount that was deducted from her gross earnings of $92,100 before any federal or state taxes were calculated, because this is what was being pulled out to put in a qualified retirement account. Okay, and because because this was money taken out before taxes were calculated, so all of these numbers here, okay, then what this means is that this money is considered tax deferred, meaning it's not taxed now, it's put into a retirement account, and at the time of withdrawal during retirement, then the amount will be taxed, okay? And then the other item is in box 14. You'll see over here, it says CAF 125. This is called a cafeteria plan. And this is where you can tell your employer to hold back a portion of your pre-tax income or pre-tax wages and be set aside so that you can use that money to pay for certain medical expenses or child care or parental care expenses, or even unreimbursed medical insurance expenses, okay? So this is all pre-tax money, and this cafeteria plan is considered a type of flexible spending account. Now, one thing that you need to be aware of is that with a cafeteria plan or a flexible spending account, FSA, this is what's called a use it or lose it planning. Meaning, if you set aside a certain amount and you don't use all of that money, then at the end of the year, that money disappears. It does not come back to you, okay? So the key thing here is make sure you estimate how much you really need and probably underestimate that amount so that you are guaranteed to use all of that money. Otherwise, you will lose that money that you don't use, okay? So now, the sum of the tax deferred contribution, that $12,200 up here, this amount, okay, and this amount accounts for the difference between the gross pay and the net, or not the net, but the difference in the wages, okay? So hopefully that made sense to you. Let's go ahead and move on to example 3. Okay, so this is what's called a 1099 form. It looks kind of like the W-2. Here's the employer, okay, here's the individual, Avdi, and his address. And what this also states is that there was a royalty of $5,678.90 paid to him, and it's noted in a 1099 miscellaneous form. So one of the things that you should notice is that no taxes are taken out, which is different than what you would see in a W-2 form. But you need to also be aware that this form will be sent by Northeastern Publishing Company or your employer that provided the royalty or the payment that they sent to you. It'll be sent to the IRS. And so it's important that when you receive a copy of this, that you report this income in your filing, okay, so that those numbers are consistent with the IRS. Okay, so we've covered the W-2 and 1099 form. I didn't show you an example of the pay stub, but we kind of talked about it. Hopefully this made sense to you. If any of this was confusing, please go back to the beginning of the recording and listen to it again. Thank you.